The free flow of currency across borders is given little thought, but is a central aspect of daily life. It allows for American tourists visiting Mexico to tip a tour guide in US dollars, while at the same time allowing a Mexican American living in the United States to send needed funds back to his family in Mexico. This is all made possible thanks to a network of cross-border transactions, which together are known as correspondent banking. Correspondent banking requires an agreement between financial institutions in different countries that facilitate the exchange of paper money across borders. For decades, this system has allowed millions of American tourists, agricultural and seasonal workers, household employees, Mexican hospitality workers, and millions of other Mexican Americans providing their families with needed remittances, either electronically or in cash, to easily exchange US dollars for local currency and vice versa. Over the last 20 years, critical policies such as the Bank Secrecy Act and anti-money laundering regulations have created and ensured a safe and transparent correspondent banking environment, dramatically reducing the risk for participating financial institutions and facilitating the physical transfer of bulk cash totaling more than $6.3 billion a year. More recently, however, the market for correspondent banking has shrunk by 92%. From 24 participating institutions to just 2, due to outdated fears that don't reflect the current risk level of the correspondent banking market. These fears are so strong that many financial institutions have simply chosen not to offer correspondent banking services to their customers, to avoid being labeled non-compliant by federal regulators. This drastic reduction in participating institutions has had a significant impact on the day-to-day lives of millions of people on both sides of the border, creating a service bottleneck that drives up prices, minimizes financial inclusion, and encourages exploitation of vulnerable consumers, mainly middle and low-income families who are left without options. Washington must encourage U.S. banks to increase participation in the correspondent banking market, to lower prices for consumers, foster competition, mitigate risk, and increase financial inclusion, leading to the increased prosperity for all. For more information, visit txbiz.org/correspondent banking.